If it will let me. Awesome. Okay, can everybody see my screen?
Yes.
Excellent. Okay, so here we are. Today is September 9th, 2024. As you know, we've been tracking since August 1st, 2022. So we've got 2 years now that we're seeing some numbers from. As of today, there are 2,173 active listings. This criteria is Allegheny County, single family residential only. So it doesn't include townhomes, condos, any of that jargon, and other counties, it doesn't count. So we're just tracking our area. Just FYI, here is the average of all the numbers that we've been tracking. Here is a quick look reference to 2023's number, and here's a quick reference to 2024's number. So what I want to take a look at, we are 15% up from the same numbers last year. And just, the year before was 2022, which is funny. It was 2022, but the number was 2022. But what I want to point out here as we're going through our numbers is look at the trend way back here. Look at all these red. This is when we were comping against 2023. So we're seeing like red in active listings. Then beginning in February of this year, we started seeing some small numbers in the black. A little difference here because that was a holiday. So I've been marking these purple if that week had a holiday in it. Now we're entering into very consistent double digits, pretty close, and some even up here in the 20%. So what is that telling us? There are more active listings sitting in the MLS than there were last year. Okay, so but bookmark that. Now we've got new listings in the last 7 days. So it's kind of going up, down a little bit. But for the most part, we're seeing a lot in the black here. This right here, I'm guessing sometimes it just has to do with the end of the school year. It's summer and people are just doing their thing. But we are seeing some good numbers here. These are based on, a holiday. Okay, so we are at 277 new listings in the last 7 days compared to these two in the last couple of years, right? Now we go to pendings. All right, what does it tell us? What does it tell us if we're seeing these really nice high, upward comps, but look at the new pendings. Look at where all this red is in the solds and in the pendings. People, if you didn't know or think for 1 minute that we were heading into a buyer's market, you're absolutely out of your ever-loving mind. What else might be putting us into a buyer's market is this number. 6.5% right now per Holland Mortgage. But what we're seeing here is a lot new hitting the market and not a whole lot going pending. So we're at 139 sold, down. Look at that, 7%. These numbers here are big numbers. We're going to see this number, I think, continue to pop up as well, because we were in the upper 20s, mid 20s, and now we're heading towards 40 average days on market. Allegheny County only had $2 million or up properties sell last week, whereas we've been seeing a lot. When we're in the 3s and 4s, look at that. That's telling us some $1 million properties sold, and now we saw a considerable dip. So there were only 2 in all of Allegheny County that were $1 million or more. Here's some other really impactful information. You guys should be putting this in your listing presentations. You should be talking about this in terms of a value proposition regarding whether or not a seller wants to pay a commission. Do you want the gene pool of buyers to get smaller when it already is going down? Right? Total number of price reductions. Look at these numbers. In 2023, it was 510. Now we're at 637 of number of price reductions. 2022, there was only 278 price reductions same week. 637. 98.07 is our sales price to list price ratio. That means what did it list for? What did it sell for? So we're about 2% off. We were looking in the 99s and over 100 earlier, in the summer. But now we're dipping. We're starting to dip down. All these numbers are going to tell us a story. Number of expireds. Look at that. 138. Not too much over last year, but definitely double the previous year. Number of expireds. Okay. Look at this. We are down 300 exactly from 2023. We're down 300 agents and 250 agents from 2022. So we've got people obviously leaving, and that number, we've talked about this before. It could be appraisers, inspectors, people that are already members of the multi-list. But for the most part, the majority of the people in the MLS are realtors. I've got some, I don't know what anybody else is seeing, but that's what these numbers are telling me, especially when I see all this upward mobility in terms of increase in inventory. So don't let anybody tell you that the inventory is too low, that there's nothing out there. We definitely are seeing this. Now, what is this also telling us when we've got this much more inventory, but the pendings and the solds are down? Another indication is that people are overpriced. That's definitely something that you want to look at when you're listing. You want to talk to your sellers about where the numbers look. Have we ever looked at this together? I know that I've done this before, but when I go to search residential and I'm doing sold in the last 180 days, and it's my client and they have a single family home, and let's just say they live in Churchill. I'm going to pull Churchill up, sold the last 180 days, single family, and maybe I'll get specific. It's a 3-bedroom. Okay. We're going to go to results in the MLS. We're going to go to stats, click tabular, and look at how amazing Churchill is selling for 3 bedrooms. 114 sales price to list price ratio. Can you be aggressive when you're pricing it in favor of a seller? Yes. The data shows that's a wise thing to do. If you pick another area, maybe it's, I don't even know what, but that's the information here. So let's say hypothetically, I pulled that up and it came back at like 96% sales price to list price ratio. You would want to say, okay, seller, here's where the comps are telling us to list. Let's say 250. If you need to sell quickly, based on the stat of 96% sales price to list price ratio, there's a 4% difference. I would take that 250,000 and reduce it by 4%. You might just be right in the sweet spot to sell quickly. Does that make sense? Because the stats in that area were saying it's selling 96% of its original list price. 99.9% of the time you can, I don't want to be morbid, but you can kill a client in a good way with numbers. If you can support your cause and explain to them, when you're asking them, what's the most important thing to you? And they're like, oh, we want to make the most money, but we got to be out of here in 30 days. Well, sometimes you can't have both. Let's look at the numbers. And in Churchill, it's looking like, hey, the numbers kind of support that. Looks like you guys could be in and out of here if we price it correctly, in 30 days. So I just really think that all of us should be changing our dialogue around it being, oh, it's a seller's market. Oh, it's a seller's market. You better look at those numbers first, because on average in Allegheny County, that's not the case. Churchill obviously looks like it's booming. So totally different. And then maybe they're keeping the rest of us afloat, which is interesting because Churchill is in Woodland Hills School District. And sometimes that's kind of a tough one to sell because of those school taxes. But in any case, if anybody has any questions, we're going to be talking a little bit about these kinds of numbers that will help you when you're doing a listing presentation. I'm teaching for Allie tomorrow. She's in Austin for the next week for team leader management training that they have every year. So would love to see you guys. What was that, Jordana? Oh, Penn Hills. Yep, for sure. For
Sorry,
sure.
I'm multitasking. Yeah, I mean, what you're saying about Churchill, it just makes a lot of sense, but it's all relative, right? So, and even now in Shaler, I mean, the prices have gone up so much, but there's a lot of people. I mean, we have a decent school district, but I mean, when I first moved out to Shaler and I'd get referrals from the city, it was like anywhere but Shaler. They wanted to be in NA or they wanted to be in Hampton, but Shaler's closer to town. So what it is, and there's a lot of people, they don't have kids or they don't, they're, I mean, it's just not an issue so much for a lot of people right now.
I want
So,
to, can we have a moment around the fact that post-COVID, when people refinance, this is just another angle. People refinance. I refinanced. I'm at like 2.8. Am I going to sell anytime soon? Probably not. But you may have some people that didn't refinance, but they're still hybrid or remote. And so if they're in the city, maybe they don't have a yard. I think some of these outlying areas are seeing the momentum
well,
and people,
that's what I'm
yeah,
saying. Like people say, oh, this school district's not, we don't want to say what's good or bad, but you can look at the stats. And the bottom line is Lawrenceville have a good school district? Does Southside? I mean, the prices are what they are. So those are the demographic of the people. They're not looking at, and let's face it, you got two people working, making good money in the tech industry without kids, they can afford a more expensive house than someone who has kids who needs to be in the best school district.
yeah,
So it's a totally different demographic.
for sure, for sure. Well, thank you, everybody. Definitely would love to see you if you can make it tomorrow. We'll have some suggestions on how to ramp up your listing presentations, but would love to see you. But thanks again for showing up this morning, and we will see you next Monday.
Thank you, Jen.
Bye, everybody.